Good morning. It is February the 1st, 2017. Time to kick off another trading month. And today's market will greet us with an FOMC announcement where no change is expected. Our usual disclaimer: hypothetical simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have over or undercompensated for the impact, if any, of certain market factors such as a lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Boy, the government is everywhere and wants to be even more places. Now, they just cannot leave you alone. A bureaucrat has to do something, right? Make rules and regulations. The FOMC meeting today is probably the biggest factor, and that tends to freeze the markets. We do have news: motor vehicle sales plus 17.7. That's a healthy number, although you'll see articles about the manufacturers have to heavily discount to reach those numbers. 168 for the ADP private employment number. The market will react to that. PMI manufacturing 54.3. Europe's PMI manufacturing numbers, pretty much every one of them beat the forecast, not all of them. Our focus ISM manufacturing 55. Construction spending up 0.2. No one pays any attention to that one. That one actually might come in as forecast. It's such a low number. Crude inventories plus 2.6. Yesterday, APIs built 583. Crude 286 in gasoline and 2.27 in distillates. Cushing did draw almost 1 million barrels, so and crude oil's up after the API numbers were out. Then the FOMC meeting at 2 Eastern. No changes are expected. The focus will be ADP employment, ISM manufacturing, FOMC, and for treasuries, the direction of the ES, which is stuck in a fairly tight range. Resistance is at 12 to 16, so 11 to 16. 15 is sell 1. 19 to 23, sell 2. On the buy side, 1 to 5. We are looking at a B, might be a little bit lower. Might take an 8 to get in, don't know. Kind of where we were yesterday. 25, 29, buy 2. We left yesterday's market selling 19s to 23s, did not get close to that. And we had a buy 1 to 5, did not get close to that. So pretty tight market last night for the 10-year. Looking at the 30-year, resistance is at 16 to 20. That's number 1. 23 to 27, sell 1. Make it 31 to 03, sell 2. Support is 4 to 8 is awfully close, but that's where it is. 4 to 8, number 1. So 29 to 01, buy 1. And 17 to 21, buy 2. Okay, we left yesterday's market wanting to sell 19s to 23s. The high is 23. We had our first band of support at 28 to the... our first buy was 9 to 13. Our support was 9 to 13, and we have a low of 6. So we're kind of in that one. So we did a pretty good job of guessing where the bond would be. Looking at gold. Did get stops below 10. This breakout in A period held at 9, so we've got a P forming in the congestion area. Volume is high in the distribution, so maybe the low is in. So buying 8 to 10, buy 1, then 4 to 6 for buy 2. Never did see an article that gave a reason for the strong rally in gold yesterday. We're at the attractor right here. Top of value yesterday is 16, so 15 to 17, which is where we were last night. And we had a high just at 15, and then 19 to 21 for sell 2. Pretty much yesterday's numbers. Or last night's. Donald Trump's trade advisor says the euro's too high. Our problem really is the dollar is very, very strong, and that's not going to be easy to erase when you look at what's going on in the world. China built 80 skyscrapers last year. We had less than 10 in the United States. It's kind of like economies peak when you have peak skyscraper building. They see nothing but good. Companies peak when they buy their first corporate jet. That burns up a lot of cash. Okay, looking at the euro, we had a yesterday 20 to 30 sell. We got up to 24. That worked. Our buy was lower. We put a question mark at 108 even. We got down to 92. So we have a P we're holding. So this 85 to 95 buy 1. 50 to 60 buy 2. On the SL side, 20 to 30, sell 1. 108.50, sell 2. Crude oil. Today is the EIA inventory report, looking for a build of 2.6 million barrels. Last night the APIs built 583. It's a big number. And you can see right here that we have this little saddle formation going once again. The attractor right here, the high volume number, pulled us up to it. I don't see any reason why we can't trade a little higher. We've got a P right here. So we're at 15, so 25 to 50, sell 1. 75 to the buck, sell 2. On the buy side, 50 to 75. And then 52 even, 52 and a quarter. We usually look at about a 40 tick day session trading range into the EIA number. Looks like that might be the case today. The market is ignoring bad news, not paying any attention to the inventory reports. It's also ignoring the overproduction out of OPEC members. And the meme from OPEC itself is, well, we're not going to work off the excess in the first half of the year. It'll be gone by the second half of the year. Buy crude oil. And we'll see if that happens. The economy is expanding. Europe's economy is actually showing accelerating growth, if you can believe that. And they're big, you know, they're expressed a lot of gratitude when they can get 1% growth, which is almost a recession. Too close to call. Hey, we're in a trading range on the E-mini. I'm guessing we're going to trade higher. So yesterday, support held. Got a pretty clean break in the market up here at 88 to 90. Got highs above yesterday, stops above 85. So 84, 86, sell 1. 89, 91, sell 2. Now, if we can't get through 82, we'll have to pull these numbers down. But right now, it looks like it's going to trade higher. FOMC tends to freeze the market, so 75, 77 by 1. 70, 72 by 2. Motor vehicle sales, 17.7. ADP, 168. PMI manufacturing, 54.3. ISM manufacturing, 55. Construction spending, plus 0.2. Crude, plus 2.6 million barrels. And FOMC. Okay, it takes till noon for the motor vehicles numbers to get out, but that will be part of the market, but it comes in late. So ADP, ISM, motor vehicle sales, then FOMC. And I'm playing for a trading range a little bit higher because support held yesterday. Get up there and test resistance at 85 to 90. Okay, it won't take too long to get everything up and posted. I will be back with you as soon as I can. Get my stuff done.